Hey everybody, Sarah Grillo. So getting this question a lot on my channel, and I just wanted to post about what do I see as the future of the financial services industry. So this is really something that a lot of the financial advisors that I work with are asking me about, and also the people that are in the CFA program that follow me and are interested in knowing what career opportunities may exist for them in the future. So from what I can see, the digital revolution is rolling forward, and while many quote-unquote brick and mortar industries such as finance will be the last one to succumb to this trend, the last one down, so to speak, it is slowly in progress and it is still happening. So why is finance the most resistant to technological change? Well, there are a few reasons. The first reason is that, by the way, I have to just tell you that I'm 8 months pregnant here, so and I'm on vacation in the country. You can see I'm in a log cabin. I apologize, folks. This is very unprofessional, but I can't even speak hardly. My lungs are like about this big right now. So I could say that finance is typically an industry where, because it's typically conservative, very slow moving, some people may say stodgy or staid, there hasn't really been a lot of penetration from the internet and from digital media, because of not only the conservative nature of working with people's money that measures in the millions of dollars, and people not really wanting information out there to be public, but also because of the compliance and all of the regulations, because of all the wrongdoing that has happened in the past from people that had unsavory moral character. So because of those two factors, finance has typically been, I would say, resistant to the internet. Whereas now you are seeing with robo-advisors and virtual advisors, the field is slowly picking up and services are being delivered virtually, or being delivered from people that perhaps have never and will never even meet their clients. So certain generations, I believe, are more comfortable with this than others. I think for millennials, maybe some of the younger Gen Xers, that robo-advisors and virtual advisors and internet service, fintech payments, payment companies, it's not just investments, it's also, credit card processing and payment processing and, alternative forms of insurance, right? People, like when I bought my life insurance, I bought it from a very established broker-dealer, very established insurance firm that everybody would know the name of, but, some people can't get insured, right? So unfortunately, they, in the past have been unable to get coverage, which is really an awful thing when you think about, God, heavens forbid, if you had a family, how would you protect them? If you had a medical condition that knocked you out of getting coverage. Well, now there are, because of alternative investment and fintech types of ventures, there are new advancements where these alternative insurance firms will insure people that typically the insurance companies wouldn't touch. So that's a great thing for society. Well, maybe not, I don't know. Overall, what that's actually going to do to the insurance industry, that would perhaps be another video. Sorry. Let me just take a drink of water. I apologize, folks. But anyways, what I'll say is that, well, I think that technology is going to have a very big role in certain pockets of finance. I still believe that for other pockets, it will be a very long time in coming. So for example, if you deal with people with, I would say, $1 to $10 million, probably those folks are on the internet, would be likely to get a lead from the internet, would search on the internet for a financial advisor, or if they didn't, they would definitely search for ideas and be reading about it and get their information from the internet. And let's say that you were a blogger and you had a column writing about finance, I think that they would be more likely to trust your advice than what I'm going to address next, which is one of the pockets that would be untouched, which would be, sorry about this, let's say like multimillionaires, people with $500 million or more, when you're getting into like the ultra high net worth, almost what we call institutional individual, someone that has enough money to be an institution, or even I would say like $50 million net worth and above. I think that those folks are probably not wanting to be public as much about their net worth. And it's not to say that they aren't internet users, because don't forget that a lot of people have inherited their money, but many others have come into their money by being successful entrepreneurs and business people. And for them, if they're running businesses, chances are that they're on social media, that they're on BuzzFeed, that they're on TechCrunch, that they're on Facebook. So I wouldn't say that like ultra rich people don't use the internet. I think that that's absolutely wrong. But what I would say is that the extent to which they'd be willing to engage and interact with somebody that they met through there, I think would depend on their personality and their experience. That's the point I'm trying to make with this. Whereas for the, I would call mass affluent, like $1 to $10 million or less than $1 million even, I think that those folks would be much more likely to use a robo-advisor and view I think at that level you're viewing the practice of investment management less as a relationship and more as a service. So almost like, I don't know, something like if I'm looking to call a cab, right? I'm going to go and hire a cab service. That's different. I don't need a relationship with the cabbie, right? That's different from if I'm looking for someone to take care of my children and I need to find a daycare provider. I don't know if I would go and look for a daycare provider over the internet. I need that relationship, right? So that's kind of where the fundamental divide, I think, is going to be in the future. But what does that mean for financial advisors or for anybody that would be going into the field of finance? Well, I can tell you that obviously being up on the internet, knowing about how the search engines work and how all of digital marketing and media works is going to be a huge plus going forward. And that's not only for people on the service side of finance, but also for people on the analyst side of it. So for example, if you're an analyst covering, let's say IBM, going to, now I mention this and people are always kind of like skeptical about it, but going to Glassdoor reviews and seeing what employees are thinking about IBM, or reading, there's so much, we live in the information age, there's so much more access to threaded discussions and shared thoughts that are offered by communities about technical topics, technological topics related to IBM, that if you're a research analyst, you absolutely should be using social media for research purposes. And I don't just mean going to IBM's company Facebook page. I mean, yes, you should do that, but I'm talking about going to conferences and then being in touch with people and hearing people at the conference what they're saying on social media about IBM and all the competitors and sorry. Any of the other chat rooms or forums on the internet where you can get information. And I'm not talking about like the creepy information that analysts aren't supposed to have access to, like they call it material, non-public information. I'm stay above board here, everybody. But what I'm talking about is, the word on the street kind of information about the industry and about the competitive position of different companies within a certain market. As an analyst, you should absolutely be tapped into that buzz. And you can get it on the internet. You can get it most of the time for free. There's a lot less, I think, credence placed in sell-side research, which is just going to look at the balance sheet and the income statement and the data that the company discloses. What's happening now with the advent of the internet is it's much more about what people are saying about you. In a way, opinion becomes reality. Perception does really become reality. in the internet world of today, where, you know, I think in the future you're going to be seeing stock prices moving and analyst opinions swayed and general perceptions of a company much more influenced by social media, for right or for wrong, you know. And I'm not going out there and saying like right now that Twitter is going to move the market tomorrow. I'm just saying that in the future it seems inevitable with everybody getting onto social media that the discussions happening there won't be more influential in influencing stock prices. The other thing is, of course, what does this mean for your, you know, what does this mean for someone that's looking to get out there and create a financial services business, whether it's a financial advisor or any kind of business in finance? Well, whether or not people find you through the internet, whether or not it's the initial reach out, at some point in the sales funnel, most likely prospects are going to be looking at you on the internet. So the thing I really want to say here is that anyone in finance should just get a really big brand. Start the brand now. Gain a following. Get a blog with an angle to it. Get a nice logo. Get a tagline. Get a position and separate yourself. Get a niche market that you focus on. Get some kind of a philosophy that drives all of your messaging and have it be consistent. Now, I've written actually a lot about branding and even specifically financial advisor branding on my website. I'm going to link that below. Sorry. The point I'm trying to make here is that most financial advisors do not significantly differentiate themselves. Most financial advisors, most financial firms are saying the same thing. The more that you can present yourself as just maybe slightly different, angled slightly differently. I mean, like, I like a big difference, but not everybody's going to really be able to or willing to take that plunge. So what I would say is that, and ask me if you have any questions about this, but how do you really get yourself out there and be that one company on the internet that when they go to your website, they kind of pause and say, that's interesting. Because most of the times financial advisors and financial firms and hedge funds and investment firms are saying the same thing, using the same lingo, and it really is almost kind of a joke. Like, it's that easy to just see this. If you go and you look at 10 financial advisor or 10 financial firm websites, go and look at it, right? They're going to all be saying the same. I mean, inevitably, they're all going to be saying the same thing. So don't be that person, you know, set yourself apart a little bit, and you'll see online that you will get more attention and traffic just from doing that. But it's really up to you to take the first step. Now, not many people know how to really do that. I've seen a lot of ways. Sorry. I've seen people do this badly. So go ahead and just, you know, comment below if you, you know, have questions about this. As I said, I've written a ton about this on my website. That's going to be linked below in the comments box. So thank you everybody for watching. I always love getting comments, and sorry for the long video. Sorry, this is like me on vacation, 8 months pregnant here, but you know, I think it's always better to just get the message out regardless of how bad the production is, and I hope that it didn't offend anybody too much. Thanks everybody. Thumbs up if you like it. Bye.